Hello, everybody. Today is Monday, the 23rd of August. Welcome to today's Silver Log. And on the web page, I've posted this longer term chart. And I've talked before about the $32 Fibonacci level, so I'll talk like a broken record again and mention it. To see these images bigger, just click on it and a bigger image will appear on the screen. And I'm using the levels from the 2002 lows, roughly at around $4 per ounce, and this double top area from 2004 and 2005. So the difference is 4 when you subtract 8 and 4. So by multiplying 161.8% on the difference of 4 and adding it from the bottom of 4, you get 1047. The next Fibonacci level, 261.8, is 1447, or was, and then $20.94 at the 423.6 level. And I've mentioned that the one that is coming up, the 685%, that's roughly at around 32. And just because it's at an area where you would expect to find resistance doesn't mean it's always going to be the case. And the pure example of this is the 161.8 level. Really didn't find much for resistance there, and it shattered up towards the 261 level. It did, however, find support, came back to this level, broke it. This is a classic breakout, getting towards that level, finding support, and right up towards the 423. Also, what is interesting about this chart, or the silver chart in itself, is the duration of time that it took to go from roughly this 19 area from back in the summer of '08 down to this low. It was a few weeks, really, and since then it has taken many months just to get back to this prior level, which is where we are currently at right now. This support line that I have drawn in represents three significant lows, now the fourth one, and it's really at a crucial point. I've been talking a lot about this range, and a breakdown below this range has the availability to test lower levels. As far as these higher lows are concerned, as long as we can get above these February lows, we would still be making a higher low. So if we come down to 1580 or 16 an ounce, which would be a break of the range to the downside, it would still be making that of a higher low. But it's really crunching within this trend line, and a breakout from this trend line should give us the resistance test at around this 21 level, which was the previous resistance back in 2008 from March. So we'll now go back onto the log, and I mentioned the 161.8 level. It's 3142 using the 4 and 8 levels. All right, so the new poll on the webpage: what's the best investment with $1,000? Is it A, 45 Canadian Maple Leafs, 50 generic silver rounds, 50 generic silver bars, 330 US silver quarters, 150-ounce bar, or SLV shares at market value? The previous one was what's going to happen within the range, how is it going to break out or break down from it. 13 people stated a small upside, 8 people stating a large upside, 2 with small downside movement, 1 with a large downside movement, and 2 people felt it was not going to break this range this year. And that's something that we'll need to look out for, because we are only September, October, November, December, a little over 4 months before the rest of the year. The range could take quite some time, but historically speaking, silver has had many major moves in the past. The articles on today's blog, ratio analyses, suggest gold and silver will go much higher. Silver volatility likely to continue. And I've been talking a lot about the volatility to come back, for it's not here right now, at least for silver standard, and it's extremely likely to be coming, we'll say, anytime. And anytime can be this week, next month, or even into 2011. Gold holds near 1230 as investors stay wary. This is a mainstream media one. There's not too many that I put from the MSM. And biggest gainer, gold and silver stocks, a little stock article, the video I made on the weekend, the silver long technical analysis, and that brings us into its previous day's article. So now at the chart analysis on the SLV, as far as this 50-day moving average, on the way up at 09 support, it dipped below the support area here. When it goes below it, it came back to this area. If it was going to turn over, this is where it would have found resistance and pulled lower. Instead, it found resistance and went higher, then came back to this 50. And for the rest of 2009, it had a nice run where the 50 was rising rapidly. It had its support tested here, came up towards here, thus making a lower high, zoomed right below it. And it was a big move below it. We went from, what was it here, about 17 something down to 14 something. That's well over 10%. And then this moved the resistance, it got above it. It's been support ever since. However, now it is tangling above it and below it, back and forth. The 50-day moving average is really getting tangled up within this range. As far as this 5-day moving average is concerned, or the shorter term look on this chart, the support area here was taken down, and now we see that this moving average is declining. And we're in an upward range since we bottomed on Friday, but it's very, very unvolatile thus far, which would be an area for concern. You can say that it's looking like a bear flag, which it pretty much is. And lately, every single time we've had our test of the declining 5-day moving average, it has gotten above it pretty much every time. And that's very normal when you're trading within a range. So it'll be interesting to see what happens when it gets down towards it. Because on a technical level, what you'd want to see is a move up to the 5-day moving average, and then retraced 62% from this bottom to wherever it ends up topping, maybe down towards where this level of resistance, maybe it becomes support, and then go back up to the 5 and then break above it. So that's today's silver log. Thank you for watching, and have yourself a magnificent day. Bye-bye.